that's why you say the market isn't rational, it's all emotional.
It's emotional.
When things happen, people either buy or sell. And
it's based on fear and greed.
Yeah.
So there's this theory out there. It's called the market. I don't want to go into it pretty much.
I'll go into it.
Okay,
I think we should.
So there's two theories out there, right? One theory by economists that the market is always rational. So everything about the economy is always priced into the share of the actual stock itself. So the market
say it again.
Everything about the economy and the stock is already priced into the stock.
Okay.
So they're trying to say the market is rational. The second theory is the market is irrational. People buy and sell based on feeling. And the way you can tell which one is right, look at the 52-week low and the 52-week high. And in a year, there's no way the company is not growing or decreasing by 50% in a year. But if you look at PayPal right now, the high was 310, the low was 174.
Based on maybe news and events.
Based on news and events. But over the long term, 5 years, 10 years, 15 years, 20 years, PayPal is going to get to a rational price. It's going to get back to 250, 300, even surpass that. So now the stock is at a discount. Buy the shares, yes, but buy the options too. Because remember, the premium multiplies much more faster than the actual stock does.
Yes.
So you can actually hold it in 3 months and make 200, 300, 400% on your money just by holding the options contract. And it's safer because you have a 2-year out contract versus just buying 1 month.
Yep. Got it. So, okay, that makes sense. Where you're saying both philosophies are right just based on what time frame you're talking about. Short term, it's irrational because it's moving from event to event, news to news, tweet by tweet.
Yes.
But it's rational in the sense that it will always correct itself.
It will always correct itself. It will always
That's the
correct
perfect way to put it.
So when it dumps and we're getting a 50% discount, everybody's selling, this is time to buy. Like the last couple of weeks, I've been looking for different things to buy. PayPal is my number one. And we're looking at SQ as well. A firm dropped from like 170. Square.
SQ is Cash App.
They changed their name to Block. Cash App.
Yes.
Now, they're also going into crypto now as well.
Yeah, crypto's a big one. So
Are they down right now?
Oh, yeah, they're down bad.
Heavy. The whole sector's out. They're down like 100. What are they down? 145, 155?
Yeah, it's 140.
Down because people are afraid of like the health stuff? Or?
Yep. That's part of it. Okay, for example, PayPal was supposed to buy Pinterest. I don't know whether you know that. The deal didn't go through. So PayPal started dumping because
investors pulled out.
Oh. I'm like, but PayPal is still a strong company just because that piece of news. And the reason you have to understand is that you have to understand that the hedge fund managers are being run by people who go to Princeton. They're top 1% of their class. And the way they become hedge fund managers, they started analysts. They work their way up by being right every quarter. So their job is quarter by quarter. They have to post profits quarter by quarter. I, as an individual investor, I can wait 1 year. I can wait 2 years. They can't, okay? Because if they mess up, they get fired. And their numbers are being compared to everybody's numbers across the board, right? So they're moving money out of PayPal, not because they don't believe in it, but by the end of the quarter, December 31st, they have to post their numbers. How did you do this quarter? Were you up 1%? Were you up 2%? Were you down 5%? So because of that, they have to take their money out of anything that's volatile, even in the short term, because they have to protect their profits or they'll lose their job.
Even if it's okay, I get what you're saying. They don't really have time to.
They don't have the time.
You have to have up and down and up and down.
Yeah. They don't have the
Eventually
time.
It will go up.
Oh, yeah.
Right? If you're a strong company.
Yeah.
But they have to move according to, I guess, other people's emotions.
Exactly.
Investors' emotions. Okay, the board. Okay, got you.
Trading takes time. It is not home runs. I respect the person that can consistently grow their account over time than the person that can literally make $50,000 in one day and then blow it tomorrow. Trading is it's compounding your account. Like even my goal, a lot of people might not even look at it as a lot, but my goal is 20% a week. That's all I want to make. 20% a week, 80% a month is what I shoot for because I don't care about over leveraging. The money is there, but I have to follow a consistent track.
80% a month?
It's possible.
So no, I understand, but I'm just trying to understand it. So it means, let's just say you're starting with $100,000. Your goal is to take that $100,000 to $180,000.
Yes, but this is also the part, and this is for everybody on this podcast too, because a lot of people like to sugarcoat this. You have to have the psychology and the mentality to see certain numbers. Okay? So, in investing, in trading, you have a risk appetite. If you're making, let's say somebody makes like Quillen, right? For him to make his $1 million day, there's a certain amount of drawdown that you have to be comfortable seeing.
Drawdown meaning my
The
account
color
is 100,000.
that's negative. The color that's
That
negative
joint went down
before
to
it goes
40
positive.
or 50 or whatever.
Before it goes profit. So you don't want to really be like, I don't believe in having your account in more than, I would say at most 15% drawdown. But that's on a leveraged position, and you have to understand risk appetite. A lot of people can say, oh, I want to make $100,000 a day. I want to make $100,000 a day. I'm not at that place where I'm making $100,000 a day. I'm not. Because my risk appetite, like the ability to see those numbers. If you're making $100,000 a day, you have to be able to consistently see your account at like 30,000 drawdown. Somebody that's making $1 million, they have to be able to see their account at like $200,000 drawdown. You see what I'm saying? Comfortable, like easily seeing it. I could see my account at negative 20,000 and okay. You know what I'm saying? But that's not the closed out position. Let me also say that. That's not closed out.
I still don't necessarily understand trading.
Yeah, well, look, I mean, it's really, people say it's a lot of numbers or math and things of that nature, and it's really not, to be honest with you. It's really colors and shapes. You know what I mean? When we look at a chart.
Trading is colors and shapes.
It's colors and shapes. I'll give you an example. You've seen a day trader, right? And typically they got like a chart on their screen, right? You don't see numbers on the screen, right? You typically are seeing charts, you're seeing lines, you're seeing shapes. And all we're looking to do is identify what shapes give us the highest odds that a trade is going to go up or down, right? And so like the way I always put it to anybody else or anybody is trading is basically clicking buttons at the right time. You know, you click the right button at the right time, you make money, click the wrong button at the wrong time, you lose money, right? And so all we're looking to do is utilize the charts and identify different periods of time where the odds are in our favor of the stock going up or the stock going down if we're trading to the downside or we're looking to sell our stock. You see what I'm saying?
Right. Okay, so when you say odds are in your favor, what is happening what's happening behind the charts that affects what we see on this chart?
Yeah. So when we talk about charts, right, a chart is literally a physical manifestation of the human emotions of the market participants. And what I mean by that is like in the market, you have retail traders like you and I, right? You have hedge funds, you have, people who have a lot more money than you and I, right? And they're buying or selling every single day, every single minute of the day, they're buying and selling stocks. When more people buy than sell, the stock goes up and the candle will be green, right? If more people sell than buy, the stock will go down and the candlestick will be red.
Right. What is your strength?
So my strength is, it depends on the seasons. I usually am better at doing scalp trading, right? Scalp trading. So that's making money in literally minutes. So it's day. So we have day trading and scalping.
Money in minutes.
Yeah.
Gotta be real.
So I'll tell you this. So I'll tell you a story. So one of my biggest days, well, actually my biggest day, I made $100,000 in the market in a day. In a day, right? Wow. This was July 2020, right? So what ends up happening is we bought into Amazon at the time, right? I bought some Amazon contracts, some Tesla contracts, some Netflix contracts. I think Google as well. Netflix was good. But Netflix was really good in 2020. So so what ended up happening was I got into the trade, right? And pretty much like right around the time of like when the market opened, right? And then literally in minutes, the stock started just exploding, right? Like a 10% gain, 15% gain in the stock itself and across like Amazon, Tesla, and Netflix, right? Now, I put in about $20,000 into the Amazon play, right? Now, what ended up happening was Amazon went from, I think, about 3,100. I think it gained about 100 points in a day to 3,200, right? And my contracts ended up going from 20K to, I think, almost about 100,000, right? On Amazon alone. Sorry, no, 80,000 on Amazon alone. The other plays that I had were giving me like 10, 20,000. And so that's how I ended up making 100,000 in a day. So that's my strength. I like momentum trading. What that means is essentially you're watching the market and looking for specific trends, right, in the market. So you might have a pre-market plan of saying, hey, what's the current news out there? What's the market sentiment on a specific stock? And, is it up or down, right? So, I would then decide to either buy calls or puts really close to open, and then I would end up selling literally minutes later, right?
Gotcha.
So then there's another one of my strategies, which is called earnings plays, right? This is one of my favorite ones. So there's an earnings report, right? Earnings play, yeah.
Earning play.
So essentially, a company would announce their earnings report of their specific their revenue and their quota for that specific quarter, right? And so essentially, what ends up happening is, depending on the market sentiment of what the investors believe that company is supposed to do for that quarter, then the stock would either rise 10% or fall 10%, right? So if you were to decide to buy a contract or many contracts of a specific company right before they announce their earnings, then your contracts actually go like 1,000% in a day. Like, you would literally make an 1,000% gain in a day.
If you call it right.
If you call it right. If you call it right. However, with options trading, you can only lose the amount you put in. Mm-hmm. This is one of my favorite strategies, because you can actually use, $200, $400, for instance. When Zoom first reported their earnings, right? This was back in 2020. When Zoom did theirs, they had contracts of $400, right? But obviously, because of the pandemic and things like that, Zoom was like a really popping company at the time. Yeah. So all the investors loved Zoom at that point in time, right? So when Zoom came out and reported their earnings, like, they beat it like by a wide margin.
The stock doubled that day.
So you can literally take $400 from that earnings report, right? And literally the next day have about $4,000, $5,000 from that $400 contract.
Now, there's things called false breakouts. So basically, what we're looking for in trading is we're looking for breaks of support or breaks of resistance, means the stock going up. So let's just say...
hold on. Yo, because this is crazy, because I'm learning this stuff right now. This is good. So resistance is the highest that it goes.
Exactly.
Like, let's say the highest it's ever been is $2.
So let's just say this is resistance, the top of my hand, right? And then there's a trend, right? And it keeps bouncing on resistance, right? All we're doing is waiting for it to break that price point, resistance point, and you'll be able to see it. It'll be like a flat line. It could be all types of ways, but what we're waiting for is a break of resistance. Mm-hmm. And once it breaks that point, that's when we buy.
You buy betting that it goes up more.
Yes.
But which doesn't make a lot of sense to me, because...
But there's a strategy, though. So it has to break support or resistance with what is called volume. And volume would be the price bars at the bottom of the chart. So basically, there's volume, right? And volume is how many contracts are traded. So basically, what volume is, think of it like a quarterback, right? Mm-hmm. So let's just say Michael Vick, like I got on Vicks, right? So I'm left-handed. The further he throws it, that's called high volume. So if he throws it with a lot of power, that's a lot of volume. Mm-hmm. If he throws it with weak power, that's low volume. So let's just say Michael Vick throws the ball with nice volume. That's going to give me confidence to bet more on the breakout.
So how sharp it goes above that line.
With volume.
But if it's like the line, it's like just like creeping over the line, then that's less volume.
Yes, but you'll be able to see it. If it tries to break out with less volume, all it's going to do is just false breakout.
That's crazy, bro. I've been looking at these charts for years.
Exactly.
Not studying them, but like seeing them. Mm-hmm. And people post them online like we know what they're talking about. But now I'm going to be looking at like
the breaks, those lines, those breaks of support and resist. So be looking for that. Be looking for certain lines, resistances, which is the stock bouncing up, just like the ceiling resistance. And let's just say, I throw a ball hard enough to break the ceiling. That's called a breakout. Yeah. You know what I mean? But if I throw the ball weak, it's probably going to bounce from the ceiling. You see what I'm saying? Right. So that's kind of how you got to think of stocks.
But before this, you weren't like heavy investing. When did it click to say, yo, this is all I'm doing?
So fast forward now, I used to tell my homies in the street about it in New Orleans. Like, I used to tell them about it all the time, and they was clicking with it, but it was just like, I wasn't serious. I just understood it. Yeah. I wasn't serious with it. So about 2017 is when it got really serious for me. I understood the power of it. So it's different when you want to do something and then when you tap into the power of it. right? And when you tap into a shift has to be made. And again, all we know is consumerism.
Yeah.
And I used to just be like, bro, like this ownership stuff is really dope.
Yeah.
Like I could go to Walmart and not really own that shit. You know what I'm saying? Like it used to hit me different. And I was like, all right. And I remember the first stock I bought was Ford. And that was when I was just buying stuff like, oh, I want to buy that.
Right.
Oh, I want to buy that. The typical feeling
sound like me when I'm investing.
Oh, I want to buy that. Oh, let me buy that. Until I realized like Ford was a bad business at the time. Like the company tanked on me. And I didn't see the recovery happening. So I took a loss right there.
What was the first major company that you invested in? What was the first major investment that you made in a company?
Tesla.
Tesla. What year was this?
18.
So 2018. How much did you put in?
$3,000.
$3,000. And what made you do that?
I just thought cars with no engine and electricity was really cool. Yeah. I thought that was the wave of the Jetsons. I was like, yo, this about to be a wave.
Do you remember what you bought it at?
I don't. But I remember when I did it, I also did an option on it because it wasn't just me investing. I bought an option on it. That was the first time I put 3,000 in one option call. I had learned what options was. And this was when...
What are options?
So options are when you say that a stock is going to go up or down. And I bet that it was going to go down. It's called a put.
Right.
So what happened was, this is when Elon Musk goes on a Joe Rogan show and smokes the weed.
You put the option on before he did that?
I put the option on when he did it.
Like as soon as he did it?
When that came out, I said, oh, this is about that out. Because I used to watch YouTube. I was a YouTube fanatic.
Yeah.
The only thing I watched was The Wire, CNBC, and YouTube. I used to love watching, because I used to watch old Warren Buffett videos. That was my thing. Like I would get on YouTube and watch Warren Buffett videos, Peter Lynch videos. And so I was watching on YouTube. I said, oh, this is about to happen. Because I understood the metrics of the game. See, I tell people all the time, learn the rules of the game. You learn the rules of the game, you know what drives a stock, what takes away from a stock. So I remember I bought $3,000 worth of put options on Tesla. And I made $2,500 in 2 days.
Wow.
And I was like, what is that? Now I could have if I would have let it ride, I could have been a millionaire. I could have been a millionaire because that sucker tanked when he did that. But I made it $2,500. I sold my options, and I was like, yo, I'm here for life.
Done.
I'm here for life, yo.
Maybe I don't even know what to read. Like just from school, bro, like on projects. I don't think I've ever passed a project because I'd rather just not do it. Because I sit down in front, if I want to learn something, all of the way I learn is through experience, right? I learned how to podcast because I almost 200 episodes, right? I just do it. And now I can teach based on the experience. But if I'm going to go on a computer and say, how do you ask good questions? How do you set up a podcast?
Right.
I would be so confused. So in terms of fundamental analysis, in terms of researching a company, how do you research to a point where you feel comfortable to invest money in it?
I would say I'm looking at their assets versus liabilities. Where do we
find it? Show me. Okay, where's my phone? Show me like where you get that stuff from. Like, let's say we're gonna research. Somebody give me a company. Apple's easy.
Right.
Apple, give me something else. Road. I don't think it's called Roadcaster, bro. That's the name of the equipment. General Mills. General. Okay, so what would I type in a General Mill? What would I type in Google to start the process of should I invest in this?
So sec.gov would be one you could type it into.
SEC.gov.
I would say it's a cheat code site that I like to tell people called Simply Wall Street. Simply Wall Street is a good one. So it already has. Yeah, so Simply Wall Street. Yep, that's it. So basically, you would go and you could type in the company, right?
Okay.
So you could type in the company. Let's just say.
Let's go General Mills.
All right. Let's just do GM because I know they're not going. I can't find that quickly. General Motors, right? So Chevys, Corvettes, all that, right? So this is a quick way to get good fundamental analysis quick, right? So they showing you
already. You got to sign into this joint.
Yeah.
You got an account?
I do.
All right, yeah. Go to yours. They ain't about to start blasting me.
That's how you would.
Nah, pull it up though, because I want to see. I want to go through the process of seeing it
out. Okay.
Yeah.
So basically, with fundamental analysis, what people are doing, they are doing what is called giving stuff extrinsic values. So extrinsic value is almost like if you were to go to Walmart and you're trying to buy a Snicker bar, but the price is $125, but you know the price is going to be $1 if you wait 2 months for the next season.
Yeah.
So what a lot of people like to do with fundamental analysis is give things called extrinsic values. And they have a whole bunch of ways to calculate it, but they'll give it a price and they'll literally wait for it. So they'll either say, I'm going to short the stock because it's too high, or I'm going to buy it because it's at a discount.
What does short of stock mean?
So short means wanting it to go down. And longing something means wanting it to go up. So longing is, so here are the bullish things you will hear in stocks. So you will hear what is called bullish and bearish. Mm-hmm. So it's based off the animal's fighting attack style. So bull strike up, bear strike down.
Really?
Yes.
I didn't know that. Did you know that, Joe? I had no idea.
So whenever you hear the term bullish and bearish, remember, bull strike up, bear strike down. So a bear just stand up, strike down. A bull go, strikes up. So you know what I mean? So
bull market and bear market makes sense. Bull market means everything's up. That's what everybody's excited.
So that's what we're currently in.
All right. Bull market?
Yes.
I thought we just sleep. I thought we was in bear.
Nah. No? So we're in bull. So the market is based on what is called SPY, the S&P 500, Standard & Poor's 500.
Okay.
You ever heard of that?
No.
I
heard of S&P 500.
What about NASDAQ? You be seeing that? Yeah. Yep. So the S&P 500 and NASDAQ pretty much are the markets. And when those are up, that means the whole entire market is following those.
Come up a little bit to the mic.
Okay.
Go ahead. I'm sorry. Go ahead.
So when those are up, the entire market is following the S&P 500 and NASDAQ. And they have a lot of the same stocks.
How do you know when something's going into a bull market or a bear market? Or coming out?
That's when you have to watch the charts. There is no way fundamentally you will know that the market is up without looking at the chart. Mm-hmm. You know what I mean? So that's one thing I will say. There's no fundamental trader that can't look at the chart because you have to know where you're buying. You know what I mean? You have to use both. You got to know if I'm researching this company, is it a good entry point? Because just because Apple is a good company doesn't mean you need to invest in it right now. You know what I mean?
An entry point is wherever the stock is at right now.
Exactly. So you always want to buy stocks on a dip or during turmoil. So the real slogan is buy when others are fearful, sell when they are greedy. So you want to buy when there's a market crash because everyone is scared. That's when you need to buy. See, people have it opposite. They want to buy when everyone is talking about it. You want to buy when everyone is scared and saying, I want to pull out, I'm afraid. That's when you buy.
Ernest, what's your biggest win and your biggest loss?
I think.
Latoya, get ready because I'm coming to you with the same question, okay? Biggest win, biggest loss.
I think one of my biggest losses that hurt, Latoya probably remember that, day trading. My biggest loss back to back every single day. Boom, 6,000. Boom, 7,000. Boom, 8,000. Like back to back to back. And probably like one of my biggest days was probably a 6-figure day.
Had a 6-figure day trade.
6-figure day trading.
The one where you got hit back to back. Was that early in your career? Did you do something wrong or it's just a part of the game?
So what happens is, like when we teach our students, right? Trading is hard, right? It's all about who you are. Who you are is what you bring to the trading platform. Just like LeBron, Jordan, who they are, they bring to the game. That week, my game wasn't on point, right? And I shouldn't have been trading. And I knew that.
So it was a bad time for the market. You're saying you were in a good mental space.
I wasn't in a good mental space. I clearly know I wasn't in a good mental space. So, right, it's just like how I wanted the pain. That's how it came out. I wanted the pain. So when I put myself in that situation to start trading, when I was catching those losses and doing stuff right, because as a trader, you're reviewing stuff. Like, I'm an excellent trader, right? What we do is on point, but it's the consistency. So, but when I brought that type of personality to the market those 3 days, I had to sit back and reflect and look at my trades, but more so look at where I was at mentally, and I wasn't right. So that's how I know, like it was just horrible. So it wasn't my skill set; it was just who I am at that particular time.
I want to get into that, Latoya. I want to ask you the same question, like your biggest win and your biggest loss. But if you can extrapolate what he's saying in terms of coming to the market, because I'd like to hear your perspective on what he's saying. Then I'll come back and let you explain yourself. But give me your biggest win and your biggest loss.
So 6 figures on Tesla. That was my biggest win. And my biggest
6 figures
loss,
on Tesla? And how long? How much time?
How much time is a day?
Yeah, like a day.
One trading day.
Yeah.
My biggest loss was CBI. I don't even think that stock exists anymore. Chicago Bridge and Iron, I believe. CBI, that company.
Chicago.
I lost like probably 13,000, just like that. But it was out of ignorance and stubbornness as well. So I can definitely relate to what Ernest is saying. Because trading is really about you against the market. It's not necessarily about what you know. It's about battling yourself and knowing that you shouldn't be doing certain things, but you still do it. You're like revengeful because you're trying to be right. And that's the thing with the market. You can't try to be right. You got to observe and follow what the market's doing in order for you to basically make money. So I was battling my demon that day. So I'm in a position knowing and seeing that it's doing the opposite of what I'm doing in the market. So I decided to add on to my position.
What was going on in your life? When you say you're battling your demon that day, what was going on at that time?
It's more so always trying to be right. It's just, you're always trying to be right in the trade. That's one thing traders go through is like, you want to be right all the time.
But isn't that the reason we do all this stuff? Because we want to be right. What's wrong with that?
But it's different when it comes to trading because everything, I would say most things in life, you kind of have a handle on, you can control, but you can't control what's going on in the market. You got to be in control of yourself. So the moment you're in control of yourself, you're going to be able to see the results in the market because you're not fighting against what is obvious to you.
Give me an example of losing control in the market.
CBI trade, for example, losing control is you're in a position and you can see in your mind as well as on the charts. You have a predefined risk. You're like, you know what? I'm going to get out of this trade if I lose $1,000. So you see the trade and it's just moving. And then you're like, okay, here I'm going to add to this position. So you're putting on more size, more leverage at this point. But you know you're wrong. You didn't stick to your $1,000 risk. By the time you look around, you're down 4K, 5K. But you're like, you know what? I'm going to add more because at some point it's going to go in my direction. So by the time that happens, by the time you look around, you're like, that I'm down $13,000 and I'm going to have to swallow this loss. Because I'm not blaming the market. I'm blaming me because I could have cut the loss hours ago.
What is the most money you made in a day?
Okay. Well, now that's a good question.
I ask good questions.
Yeah, that's a good question. Well, okay. Well, the most money, am I allowed to kind of give a little background or you just want...
Let me get the number, then do the background.
Okay. So the most that I've made in a day, I made $19,000 in a day.
In one day?
One day.
What's the most you lost?
I've lost $50,000.
Okay, I'm discouraged again. How did you lose $50,000?
I mean, because I got, I know what I was doing, to be honest. Like, I honestly didn't know what I was doing. Like, I got...
But you put $50,000 up and you don't know what you're doing?
No. I grew my account.
Right.
I grew my account. It was a small account, you know, it was about $3,000. I grew it, you know, and I got real cocky real quick. I didn't know what I was doing. I see people all the time that get so excited and they're like, oh my God, I made all this money. I don't even know what I did. And I feel so bad for those people. Like, yeah, I feel for them because very soon it's going to happen for them. It's bound to happen. Like I, you know, as I said, I was a teacher. I was making less than $50,000 in a year. I was making like $38,000 after taxes. So for me to like see that kind of money in a day and to make that kind of money, like I actually made that amount in a week. I made $50,000 in a week. It's like, if you're not used to that kind of money at any given time, you're going to lose your cool. You're going to lose your head. And so it's not to be discouraged. I actually want to encourage you, let you know that people take losses, but you don't have to take catastrophic losses. I would call that a catastrophic loss.
And you teach people how not to have that loss. Okay.
Absolutely.
What's the most you made in a month?
In a month?
Trading, just trading.
I mean, now, okay. So first of all,
I'm in your business.
You are in my business. Yeah. Now, I don't like talking about all these numbers because for one, this industry is very well swarming with regulators, IRS, you know, all those people that you don't like to. I'm not that one that likes to flash my business, you know. And I can also say that for I'm thinking, disclaimer, for risk, you know, purposes, my success is not going to be an indicator of anybody else's success.
Okay, do me a favor. This ain't even for them. All right, just type it. Just type it. And I'm not gonna say it, but just so I understand what's going on. Like that you've profited in a month from trading. I need to see these numbers to know if this is something that I can shoot for that one day.
I mean, okay, I can tell you what it is. There, okay. So they're going and erase that. I mean,
how long did it take you to do that?
You asked me how much have I made in a month?
Like in terms of like how much work, how much?
I mean, okay, there's different levels. And the last thing I want to do is mislead people. I want
to be misled a little bit. I need a dream.
Well then, you want a dream? Okay, all right. Well,
that number was, I was like, hey, in a month, that's good.
Okay, I mean, it wasn't hard to do it. You know, that's the beautiful thing about trading. It doesn't have to just be you sitting in front of, you know, your phone or your computer all day going in and out of the market. It can be you looking at, you know, whatever you're looking to trade and making some moves at the beginning of the month or certain moves, you know, throughout several months, and then that starts to build up. It starts to, you know, build up. So for me, that fits more with my life now.
Walk me from the beginning. I don't know anything about this. What do I do?
Well, first steps, if you're going to become a trader, is you have to open a brokerage account. Okay. And you need to do it with a robust broker.
Which one do you prefer?
I like one called TradeStation. But there's several good ones. So like Interactive Brokers, TD, Ameritrade. It just has to be.
Is E-Trade one?
So they're getting there, but they're not quite there. So
Robinhood is what.
There's tiers to this.
I was going to say Robinhood is what everybody goes to because you get the free trade, and they think that that's a really interesting perk. My daughter has had Robinhood since she was like 14. She used it under my name because you have to be 18, but. I think, didn't they stop like this whole GameStop play?
Right. So it's a couple things. Whenever there's a lot of volatility, oftentimes Robinhood will cut everything down so you won't be able to get in and out of your trades. Also, when there is like this thing with GameStop or AMC, they wouldn't let people get into the trade, the retail investor. But the institutions could still trade.
Right.
So if you have the markets are moved by buyers and sellers. So if you have institutions that are putting in big orders, they're going to move the market while the retail investor is locked out. And then another thing on Robinhood is the entry times are a little slower, and the spreads, they make their money off the spreads. So like, say you put an order in to buy Apple and we'll just make up numbers, like at $130, and I put in an order to buy Apple too. On a more robust broker, I'm going to get it at $130. You might get it at $130.75, and you don't notice that's that different, but they're making
that's how they make their money. So when you say that,
what was that? What was the? Because I'm downloading it now. Which one do you prefer?
I like TradeStation.
TradeStation. So you talked about, I'm downloading that too. You talked about something important because considering who our audience is.
Yes, That's it. Oh, sorry.
Considering who our audience is very important, because I would venture out to say that more than 50% of our audience is probably utilizing Robinhood.
Yep.
And you said something about them locking you out of your trades so you can't get in and out of trades. And that's actually happened to me before, not in the stock market, but in the Forex market, where I couldn't get out of a trade because of my broker, and I'm just bleeding money, bleeding money. And so for a beginner investor who just understanding the psychology of our audience and knowing what they think, because I also work with another investor, Trapper.
Yeah.
Okay.
Wall Street Trapper. Shout
Shout out to Trap.
Shout out Wall Street Trapper.
I'm setting my account right now, so because I want you to walk me through what I'm supposed to do. So go ahead.
Knowing the psychology of most beginner investors. Number one, there's a fear associated with investing. People are scared to invest in this imaginary almost space. You're just putting your money out there. Yeah. But they also want it to be easy, right? And so Robinhood represents ease. What would be, for a beginner investor, beginner to intermediate, what would be the place that they should start in terms of getting a broker? Something that they can understand and is user-friendly.
Yep. So there's 3 tiers to brokers, online brokers. One is the Robinhood, Webull, get in, it's easy, we'll explain things, but you don't have all the functionality that you need to really be successful.
Okay.
Then there's the middle tier, that's the E-Trade. We give you a little bit more functionality, but our customer service might not be as robust as you really want if you're going to be a day and swing trader. Then there's the higher tier, the interactive brokers, TradeStation, TD Ameritrade. They are built for brokers, or they're built for traders. So the things I love about them is our entry times are faster. We're able to do multiple entries and exits. So like I can program my trades where I know exactly if I lose how much I'll have and if I gain how much I'll have. We call it set it and forget it. You can do that with TradeStation because they let you do 2 exits. But you can't do that with E-Trade, Merrill Lynch, none of the others because they only let you have 1 exit. So it's just about having more options with a better broker. And that's what you need when you're actually trading for income. And I think to the point of your students or for the audience, they should open a brokerage for where they want to go.
Yes, not for where they are.
Now.
Not for where they are.
Right.
So
And TradeStation is a good place to start.
Yes.
When you get to that trading platform, and like Latoya says, it's the same we have when we're trading. When trading is visual, because we're using a lot of charts, right? We're reading the emotions of the market, right? So just like
the market has emotions.
Emotions, because that's why you have different colors of candles. You got the green candles that has an emotion of greed, right? Prosperity, right? Happy, right? Market goes up. Then you see the red candles that has emotion of fear, scared, shocking, right? So we have a saying, we teach our students, trade what you see, not what you think, right? So for example, you see, say Apple or Tesla, you see a red bar, that's fear. They clearly selling the stock, right? There's people exiting the position. But you think because you drove here, you saw 2 or 3 Teslas on the road, that Tesla is popping.
Right, the whole world is wrong.
Yeah, the whole world is wrong.
2 Teslas right next to me, it's a sign.
Exactly. It's doing good. Yeah, nah, you see a tweet, anything happen, but you clearly see that they selling it off, but you buying. Because in your thought process, that it's going to come up.
Wow.
Right? So when you're sitting there and you're allowing your emotions, because whatever's going on in your life, that pain is like, oh man, I know I'm right. And like Latoya said, I know I'm right. And you know that you need to stop. Because as traders, as professionals, we know our average 3 trades, right? We going to get 2 out of 3 right. 2 out of 3 right. If I get 3 trades in a row wrong, we did something wrong. Because as traders, you trade with probabilities. You don't just trade just to trade. So when I'm trading, boom, 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 I'm making money, boom, boom, I'm making money, right? Out of 3 trades, we should be good. But if you get like 1 trade wrong, all right, cool. Boom, 2 trade wrong, all right, something's not right. Boom, 3 trades is you. It's not the market. You got to stop and reevaluate yourself to see where you're going wrong.
How are you able to predict that I'm going to do 2 to 3 trades right? How are you able to predict that?
Because over time, right, we have a solid trading plan and a solid trading strategy. So we're entering on a certain type of setup and we're exiting on a certain type of setup, right? So when you're doing trades, right, it's not, you're scanning and you're looking, right? That's why the hardest thing to do is day trade, because you need seat time, right?
Yeah.
Seat time, Latoya, you explain what seat time is.
Seat time is just having the ability just to sit and watch the markets and observe exactly how the markets move. So there's a time when the market trends, consolidates, and trends again. Trends is basically either moving.
I'm sorry. There's a time when the market trends,
consolidates,
and then consolidates. What's consolidates?
and
I know what
trends
trending
again.
is.
So trends is moving straight up or straight down.
Yep.
Consolidate is sideways.
Okay.
So a lot of people call it chop. The market's
chop.
choppy. So whenever you hear that, that means they're losing money because it's very hard to make
gave me
money.
a good little visual, like where it's like that's consolidated.
That's consolidation.
Indecision. People don't know where they want to go yet.
Gotcha. Okay.
And it's very hard to make money in chop. Majority of people lose money in chop. And that's why day trading has its bad name, because not a lot of people take time to observe how the market functions. We call it, there's a whole market dynamic.
Yeah.
So we know when to enter, we know what time to be out that trade by in order for us to make money. We know to sit and wait and watch for another setup and then enter. Everything is timing as well as the setup. So you need that seat time to really sit, to be able to watch what's going on.
So we make money off of the average person's emotions. So we're trading the emotion, and that's what shows up on the chart.
Explain that.
So, like I said, when Latoya shows, when you see the chop right there, that's like a sideways movement. That means that, imagine you buying something, say at $5. It shoots up to $6, right? You don't get out, then it drops down to $4. Like, oh man, it shoots back up to $6. You buy it at $6. It drops back to $4, and you sell it again at $4, right? We can see that the market is manipulating, have algorithms, right? Then also we can see when it breaks past 6 and starts going 6, 7, and starts increasing in volume, right? Then that's our signal that we're going to follow the big boys and girls, the hedge funds, boom, because now the emotion turned to a green, euphoric emotion. But once it gets to a certain level, right, we can visually see that it's exhausted, it's tired, like a running a race, and the hedge fund's about to dump it real quick. Now we know to get out. But the emotion side, people come in too late, then now it dumps, things like that. So our job is now to flip that position and make money as the stock goes low, because we short sell a lot too.
Gotcha. So if you see it trending up, you buy when you see it trending up, and when you maybe feel like it's going to come down?
Well, you'll visually see because the emotion, right? You'll start seeing the candles turn another color, red. It hits maybe what we call a resistance area, like a ceiling, and it starts changing, it starts dipping a little bit lower, right? As a trader, we're trading for income. So we're just looking for that initial move. Once it starts coming back down, it starts changing that personality, that attitude, right? And it's like, it's no longer happy, euphoric. It's starting to turn a little fear, a little scarcity, scariness. And that's when you start exiting out the position. But a lot of people can't visually see that because of that thought process in their mind. They start talking about, oh, this is a great CEO. This is a great company. Yeah, it could be all good, right? But if you see something different, you might go against it. It's just like being street smarts, right? You could be in a great neighborhood, right? You see some undesirable people in the corner hanging there, and you got a nice car, right? Like the chances for you to drive past and it's a little bit suspect, you may want to go around. Yeah. But you're using your eyes, your sense of judgment versus it's a great neighborhood. So that's what we do. We're trading the probabilities, what we see. Like that.
What it tells me about people in general is Like, if it takes you a little while to get comfortable with a certain pair, you got to be able to kind of think things through. You don't want to just jump into the market and start trading the fastest moving thing. I did that. That's how I lost $50,000 because I got into something, and I mean, there's a couple of reasons why I lost $50,000, but one is I got into something that was moving crazy amounts. Like in the market, we call the market moves, and we call these pips as far as in Forex. So you get paid based off the number of pips that you collect. And depending on what you're trading, if you're trading and, it's $1 for every pip, then you're going to get paid $1 for every pip. You can get $100 for every pip. I was trading, a little heavier, for not knowing enough about the market. And this market in particular was known to move at least 1,000 pips in a minute. A minute. Yeah.
Man, that sounds scary.
Yeah. It was Ripple. It wasn't a Forex pair. I still have trouble with Ripple to this day. I have PTSD. I call it cripple,
Because it moves so fast.
Yes. I mean, I was doing so good in this market. And then in 1 minute, there was a spike in the market where the market dropped 1,000 pips and it popped back up another 1,000 pips.
Is that a bad thing?
Yes, it's really bad.
Why
That's
is
bad.
that bad.
It's bad if you're not trading in that direction. So if you're expecting the market to move up and it goes down, you're losing. Or the other way around. If you're expecting the market to go down and it goes up, then you're losing because you're making bets on the market, whether it's going to go up. If it goes up and you were expecting it to go up, then you get paid.
And that's the basic premise of trading Forex.
That's the basic premise.
I think it's going to go up. If it goes up, I win. If it doesn't, I lose.
I mean, that's a much more, that's a very easy way of saying it. Yeah, very broad. Yeah, exactly. I mean, that sounds more gambly, a little gamblier, if you.
That's so crazy because I'm glad you said that because I was just thinking, if that's it, I'm just going to just bet. I think that joint going down.
I felt the gamble coming.
Yeah. I'm a gambler. Okay. What was the biggest loss you ever taken?
$100,000. I lost $100,000. I was depressed.
One trade?
No, well, it was in that was a terrible, I don't even want to go back to that. In one trade, I would say $18,000 in one trade.
So when did you lose the 100?
That was before I really learned everything I needed to know. That was before April 2019.
Hold on, you had $100,000 in the account?
Mm-hmm.
And then how long did it take you to lose that? Does it take you to a dark place?
Yeah, because it was 3 days and it's so terrible. Because yes, 3 days. In 3 days, and I was depressed. Literally, I wanted to quit trading. I was, but that's what I mean. It is nothing but the grace of God. I'm trying to tell you, my whole story is nothing but God.
Tell me a little bit of your story. I'd be interested in knowing.
Oh my God, you're so Oprah.
Tell me a little bit, because there's a lot going on with you, as it is everybody. Everybody's got this story that the world doesn't get, right? Even me. I got some. We're
gonna talk about the trading story. So in trading,
we're gonna get to that too,
but the trading story in regards to that $100,000 that I lost, it's because I didn't have proper knowledge and I didn't have proper education. A lot of people when they get in trading is especially when you first start out, right? You have an awareness of something, but you don't know all that you need to know until it's exposed to you, right? So a lot of people, again, identify themselves as traders, but don't understand the economy. They just say, hey, this is a buy stop, this is a sell stop, which is a position buying and selling or whatever case may be. They're just buying and they're guessing, right? They're guessing. They don't have any substantial support behind what it is that they're really looking at. And that was me. When I first started out, I knew that it was real. I knew that it was possible. I knew that you could make money, but I was making money, losing money, making money, losing money, making money, giving it back to the market. You know what I'm saying? I'm like, am I guessing? Is this even real? I remember, shout out to Q. Q is a great friend of mine. His name's Quillen. He literally, he just made $1 million in a week not too long ago. All right.
Trading.
But yeah, he's one of my great friends. This is the thing. I remember asking him one time, this was a long time ago. I was at his house, him and his girlfriend, Macy. I was like, Q, is this even real? For real. I asked him that because I had lost $100,000. I'm like, you consistently profitable. Why I'm not consistently profitable? Like, it was really making me mad because I was studying so hard. But this is the thing. If you studying the wrong stuff, you never gonna make it.
That's a fact.
And then not only that, a lot of things that people do when it comes to trading is they hop from strategy to strategy to strategy. And really, trading isn't even a strategy, it's structure. So when I first started trading, somebody told me like London breakout strategy is where you place a buy and a sell. And when the market opens, it's going to shoot in one direction. And when it shoots in that direction, you close out the position. Like, that was real life stuff that people are like going through. And they think that that's trading,
Sounds like
and it's
rolling
not.
dice.
Well, yeah, that's what I mean. So that's why like people have this whole concept that, oh, Forex is a scam, it's gambling. Like, no, it's like that's really like what I first learned a long, long time ago. And so just over time, like, it was so many different things that I just needed to understand fully to call myself a trader. I stayed in the dark. You hear me? Like, I'm talking about fasted. Troy and Rashad got on me because I was like, I fasted and I slept in my prayer closet. He was like, so you slept in the closet? He was like, so the closet made you money? And I'm like, no, it's not that. But I had to fast and I had to like really be in my prayer closet because I had to ask God for direction to see if this was really for me. Because I think a lot of people do stuff following money opposed to really following their purpose. Yeah. You know what I'm saying? And if it's not your purpose, you're never going to be successful at it because it's not what God called you to do.
I want to get into that, but I got to ask the opposite question. Uh-huh. What's the biggest win you've had?
Oh, we're not gonna talk about that one. Just know I lost $100,000.
I want to know. I want to hear the loss and then the win.
But this ain't for the people.
It could have been 3 years ago, 2 years ago.
No.
It could have been last year.
It's current.
You're telling people it's current. I was trying to
just
cover
know
that.
it's up and it's stuck, and I'll show you on my account once this day is over.
Okay, do me a favor. Just put it on your phone.
What?
Like, type it into your phone. Text it to me real quick. I just want to see it.
My phone not even on.
Actually, here, I'll just give you my phone to text to yourself.
Right now?
Yes, because first off, I don't be interviewing for everybody else. I'll be wanting to know. So text me your biggest win, I guess, over a day or two or whatever it's going to be. How long was this?
What you mean?
The number you about to send me?
A day trade.
A day trade.
Yeah. Right. So look.
What is it?
No.
I'm not gonna say it either.
Okay, I'll say the day, and then I'm gonna say the week. Okay. So
I'm not showing you either, Joe. I'm sorry, bro.
Okay.
It's confidential.
This is the day, but this was that week.
Ew, this is what you doing out here?
But look though, just know Mike trusts me for a reason.
How you do that in a day? Golly. Okay, you're to go.
Thing is to add to what Joy's saying, trading is like any other sport or any type of business. It's about confidence.
Right.
Like, we could spend money on a bag, vacation, go somewhere. The hardest thing for me to do was put money in a day trading account. Right. Even though.
Why?
Because I was afraid. Not that I was going to lose all of that money, because I built my account up like swing trading. I was buying 100, 200 shares. The stock go up $2 or $3, I would sell it. So I was growing the account. So when you put money into a brokerage account to day trade, it's just exposed capital for those moments, the minutes and stuff like that. It's not that you're going to lose it, but it's just a fear, right? So we thought about that. And because we get students all the time that have capital, but now the fact that they can trade with us and they see what we're doing, right? So when they come and trade with us, they already know the skill. They already have it already. They're just using us as a confidence booster.
Yeah.
Then now they're able to scale. Like, they start buying 100 shares, 500 shares. Now they day trading with like 1,000 shares, right? You know what I mean? So now at that part, because I was there, I was afraid to put that money in. Well, now when you have somebody there that's co-signing, even though we're not trading for them, they're making their own decisions on their own. So we say, hey, we're going to get in this trade at this price. We're looking for this target. It should already be on their screen.
Got you.
Trading is reacting, it's not thinking. And that's what a lot of people lose money in rooms.
Trading is reacting, not thinking.
It's like a boxer, man. You're not going to look in the ring to your trainer and say, hey, Do it right.
Do I do that thing I did last time? Okay.
Like you gonna get punched in your mouth.
Yeah.
Right? You already should know the play. I'm just whispering in your ear before you go out. Oh, it's a little bit weak. Oh, hey, consumer confidence report is coming around 10 a.m. Watch out, there's increased volume in Tesla. Yeah. I'm looking for these levels. All right, coach. Now the market open, you know how to handle that.
Gotcha.
You know what I'm saying? It's nothing for me. Hey, get in here. You ain't waiting for me to tell you to get in and get out.
Yeah.
Because it happens like that. That's how you look at, he just hit me with a left. Boom. Like, it's like boxing. You have to react at that point.
So